Back in September, I invested £10,000 into a new stocks and shares ISA in my Vanguard account. I also made a video about it covering off the whole process, and I'll leave that link in the description if you haven't watched that one first. Back then, the S&P 500 was riding near all-time highs, as well as stock markets across the world. By all accounts, it would be a terrible time to invest if you listened to lots of different people. Everything was overpriced and we're about to head into a crash apparently. Well, 2 months later and not much has changed. The markets are still riding that wave upwards. The world is facing a supply chain shortage and new company IPOs have just crossed $1 trillion. I made a point when I opened the account that for long-term investors into index funds, we're not trying to time the market. And what was more important was being in the market in the first place, committing to investing over that long period of time. In fact, I said quite a lot in the video that I don't care that the S&P 500 was at all-time highs, because over the very long term, the highs we're seeing today will not even compare to the market in 20 to 30 years. If the last 100 years has shown us anything, it's that the market will go up more than it will go down, and over those longer periods of time, you'll be best positioned to gain from the increases of profits from companies all over the world. So with all this being said, let's take a look at the investments in my account. I initially invested, like I said, £10,000 into my stocks and shares ISA, split across just 2 different funds. I wanted to make this portfolio super simple whilst giving me access to a couple of major markets in the world. I split my investment between the S&P 500 and emerging markets, with a split which is about equal to the weighting the S&P 500 is against those markets. So I went with £8,500 in the VUSA ETF and £1,500 into the VFEM ETF for emerging markets. For reference, you can invest in these ETFs even if you don't use a Vanguard account. Just look for those ticker symbols and you can add them into your portfolio. Simple enough. They are both very low cost funds with small ongoing costs, which are great for long-term investors, and it's exactly what I actually look out for when I'm investing, especially in funds. Costs add up, remember, they're really, really important. Right, time to look at some of these results so far, and to be honest, I'd still share this regardless of whether the markets were up or down. I really do not care about the performance in the short term. It's all about what you can achieve in the long term. So let's dive right in. Right, so let's just have a look at the Vanguard account now. So I've just logged into my page. So this will already give the game away about what the returns have looked like so far. So let's just quick recap. I've put £10,000 into this account, which was split across 2 different holdings. So let's now go into the investment tabs. As you can see, the market is a little bit crazy at the moment, shall we say. And when you get these kinds of returns in a short amount of time, it's not realistic at all. So I'm not really paying attention to it, to be honest. So a quick look at the 2 funds as we just mentioned. I had S&P 500, the VUSA fund, with £8,500 in, or as close as I could get into that mark, which is now worth £9,190 at the time of filming this video. That's seen a huge increase in capital terms in terms of £729. You'll see the emerging markets hasn't performed quite so well. We've got, what's that, just over a 2% gain there with the £1,500 investment, again, as close as I could get to that £1,500 mark. And that ticker symbol, as you can see there, is VFEM. If we explore the rest of the page, we can go into the performance section and you'll see where I initially put the investment in, or not long ago really, on the 21st September, putting that order in. And initially the market did have a small little rally and actually pulled back slightly at the start of October. But like I've said many times before, and if you were a newer investor and just put money in, this is not a time to panic at all. Markets go up and down. Of course, we know they go up more than they go down. But the most important thing here, even in this short life of this account, is over that long period of time to make sure that you consistently invest. Now, I did put a lump sum in here of £10,000. You may not be able to do that, and you may want to just put in £100 a month or £200 a month, whatever you can afford, and to try and do that, whatever matches your own personal goals and personal investing plan. For me, of course, as someone who just turned 33 recently, really my long-term investment goals will extend at least 10, 20 plus years. So I'll be able to ride out any of those highs or lows, certainly that we see in the market. What you end up with also on Vanguard, something to be a little bit aware of, this rate of return is not an exact figure of how much you've actually increased, because of course, obviously if you added on 12% to £10,000, you'd get £1,120. So why is it 10,766? It's extrapolating the returns that you've achieved in that short period of time over an annual period of return. So it's trying to be a little bit more generous, if you like. I mean, if you got 12% every single year, you'd be doing pretty damn well, because that would be market beating, certainly if we look back over the last 100 years or so in the S&P 500. I did get a small payout as well, because these ETF, I'm not sure if Emerging Markets pays out, but VUSA certainly pays out a very, very small dividend. As you can see, £1.52. At the end of the day, once that adds up and once that goes into my cash pile, I will reinvest in the ETF. With it being ETFs that I'm invested in, I will need to make sure I reach that minimum threshold to actually reinvest. So I forget the exact amount what VUSA is right now. I think it's just over £50 or so for a single share. So unless I get that, you can't buy fractional shares. You can buy fractional shares, of course, in funds, because you just put in the amount relevant and you'll get the exact relevant amount for that fund. So here in the investments tab, we can get a bit more flavor of actually what we've got here of a real capital return. 13.66%, of course, on the S&P 500 fund is a little bit crazy. Again, markets are mad at the moment. Does that mean that you should never invest at all because the markets are always at all-time highs? In my opinion, absolutely not. Otherwise, you'd probably never invest and you wouldn't actually know when the bottom of the market was, and you try and time things. And we all know you cannot time the market. And in fact, you've got to time the market twice if you want to be successful. You have to time the market on the way down, and you need to time it on the way up if you wanted to sell it. Absolutely ridiculous. Anyone who claims they can, you should run as far away as you can from those kind of people and just invest as you can do it over a long period of time. In this tab, of course, with insights, you get a bit more of an idea of where you've invested your money. Now, because I've invested in the S&P 500, I know this will be heavily concentrated in North America. These things here don't work, unfortunately. It's a shame. I wish they gave a bit more of a reflection. But you can see your top 10 investments and your sector allocation, of course, with world's biggest companies being the likes of Apple, Microsoft and Alphabet, Google and Amazon, etc. You're going to be in that IT software space, no surprise there. But what you will see, it's just fallen out my top 10 investments actually. You do have TSMC, the chip maker, is one of the largest holdings, but they have just slipped out, unfortunately, because they would sit in the emerging market sector. They're one of the largest sectors there, which is quite interesting. Now, one thing I was going to point out here actually is there's so many ways that you could organize your Vanguard account, and there's no right or wrong. I mean, I would probably get very similar returns if I just picked an all-world index fund, maybe something like VWRL, which I completely advocate as someone who wanted to invest without having to rebalance. This really is just a little bit of a more picky way for me to choose my investments so far, because let's say if the S&P 500 completely outperforms emerging markets for the next 5 years, I will probably have to manually reallocate funds to the emerging markets to keep that 85-15 split, which is roughly what I want to keep split. But then also there's nothing saying I might want to gradually increase my exposure to emerging markets, or even I was thinking earlier today, I would like a little bit more exposure to maybe the FTSE 250. Less worried about the FTSE 100, if I'm honest. I don't think we're going to get some major capital growth from those markets. The 250 is more volatile, but because of the long timescales, smaller companies, and I did a video on this recently, have actually outperformed both in the UK and the US over that long time period, just by a few percent. But that few percent, of course, as we know, adds up, with smaller companies being a lot more agile. So it might be something for you to look into. But again, what's interesting, this all comes back every single time to what your objectives are as an investor. If you only had a few years left to invest, or this is more of a defensive portfolio to make sure you preserve your capital, this might look completely different. You may even look at things like the life strategy, for example, or you may even look at the retirement accounts. Who knows? But it's really important to get things right for you. My personal opinion, of course, is I'm going to stay away from bonds. I literally see no value in them at all. That includes holding gold as well. From my opinion, I'll do a separate video on this, but for my kind of hedge against inflation, I think that's where Bitcoin and cryptocurrency steps in. It also adds a bit of speculation too. But if you were looking at a more defensive portfolio, you could just have one click on these kind of things. You could look at life strategy, for example, and then you could also build your own global equity fund. You can even use one of the ESG funds too. But the FTSE All World ETF, as we can see on the screen now, or even just something like the Global All Cap Index Fund, there's multiple options which you could do to make sure you get something that's right for you. Either way, plans moving forward for this one and generally for my ISA accounts is, if I can, max them out every single year, try and contribute monthly where I can. Might not always be the case. I think one of the most important things to do as investors getting started is just make things super consistent. You can do that £100 or you can do that amount that suits you. Personally, I think that's one of the best ways to invest. That dollar cost averaging, as you'd call it, just get yourself in the market invested. And before you know it, after a few years, that money will significantly add up. But anyway, that's what we're looking at the moment. If in a few months' time it dips below that, again, not necessarily bothered, completely take the emotions out of it. Just make sure you're consistent. And in 20, 30 years' time, we can look back on these kind of videos and have a good laugh. Anyway, let me know any comments at all down in the description below. If you need any help with these kind of things, I'd be really interested to know. If you think I should potentially change any of my investments too, depending on what I've just said here as well, if it's not matching up, again, let me know in the description below. I've done a video on how to open a Vanguard account, which is pretty straightforward. If you want to watch that video, I'll also leave a link in the description for you too. I don't have all of my eggs in one basket. This is just one of my investing accounts. I also use Hargreaves Lansdown for another ISA, a SIP, and my general investing account, as well as having a free trade portfolio for my dividend stocks. I also have a small amount in the app Stake too, not to mention my cryptocurrency holdings, which again, I have several different accounts. The things I use and the places I use include BlockFi, Nexo, and Crypto.com to spread out my different assets. I'll do a full portfolio breakdown eventually, maybe once I get past 1,000 subscribers, and that way I can be fully transparent about everything I hold and I'm invested in. I'll also be really keen to get your feedback so I can become a better investor in the long term, because certainly I am not the finished article by any means. Anyway, I hope you found the video useful. Let me know if you're starting something similar soon or you also want to get invested. Let me know in the comment section below. Be really keen to hear your thoughts. Anyway, like the video if you found the video useful. Subscribe if you aren't already for many, many more videos. I will see you guys in the next one. And as always, happy investing.